Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new weekly market review. My name is Gonzalo Canete and I'm here just to share with you a quick view of what was the week ending by 5th of July on the global markets. We're going to share the screen and we're going to go into some details in this occasion. And please let me remind you one more time, if you enjoy this content, if you keep fresh and updated thanks to these reports, don't forget to subscribe our channel and follow new updates. Index. What we're going to discuss in this quick video, we're going to talk about the numbers, the macroeconomical numbers published by U.S. economy during this week, ending even on this Friday labor market data. We have seen also the industrial orders over the week. And I want to go into detail of those numbers and also show you the effect on the mainly equity markets, SP 500 futures, Nasdaq 100, but also on euro dollar and the rest of the market. We're also going to make a quick mention of UK elections and the market impact. We're going to analyze what was the results, shocking results, especially for the Conservative Party, the worst result in the last 200 years. And we're going to also see what was the effect of these results on the pound, British pound, the cable, one of the biggest and most important major pairs in Forex, which is the pound against the dollar. And we are gonna analyze the effects on the equity market, FTSE 100, the main British index. And we're gonna end this report with the comments during this week in the summit down in Portugal in this central bank meeting discussing the futures of the monetary policies and what's the main position of the Central Bank of Europe. And a few comments done by Christine Lagarde during this week in relation with these monetary policies. Let's go into detail and let's start with the main numbers of the factory orders. Let me share the whole screen so you can see everything in detail, especially the charts and the numbers. We got on the screen the US factory orders, the monthly one, as you can see, was dropping by 0.5%. It was expected to rise 0.2%, but it was actually dropping 0.5%. And we also have the ISM services, which it was 48.8. Now, for those ones who are new in financial markets, so doesn't have still the experience of macroeconomics, when we mention the PMI services, it's just those ones, basically the index of the production manufacturing index, but in this case, that one focused on services, not on products. And we can see that it was dropping to 48.8%, which is below the expectation, which was 52.6%. But also it means that everything on these numbers, PMI, either manufacturer or services, below 50 indicates contraction, about 50 indicates expansion. So in this case, it's not even worse than expected. It's also indicate a new trend, which is the contraction of the service. And maybe from some of you get surprised by this, but it's actually positive because if we got the PMI indicating contraction, especially in the service, we know one thing. Inflation was caused mainly, the core inflation was based on services sector. And if this service sector is getting contraction, it means the inflation maybe potentially in the future is not a problem anymore for US economy. Plus the factory orders declining 0.5%. is probably another additional excuse for Federal Reserve to cut the interest rates and move forward. So these two negative numbers are actually positive for the economy. And just to quote all the results, included these ones, which is the ones we have seen today on Friday, 5th of July, which is the ones related with the non-farm payrolls. It was the non-farm payroll was 2006. Versus an 191 expected, which means it's positive, it's creating more jobs because we got new payrolls counting over 200,000, which is positive and indicates a trend on the labor market, which is not good because the Federal Reserve needs definitely a weaker labor market to justify the interest rate cuts. However, the unemployment rate was rising to 4.1% after for the last 2-3 years, we have been below 4%. And finally, it's in 4.1%, which is normal for an economy like US. Is still super good, super positive compared with the European economy, but indicate at least again, that the trend is changing and the unemployment rate is rising, and this could cause an intervention by the Federal Reserve just to stimulate the economy. So when the numbers are bad, it's actually good for Wall Street. And we got on the screen the bonds from US. One of the things I was about to highlight here is the yield of the bond is dropping, which is discounting that actually the interest rate is going to get cut probably in the coming months. And we can follow these indications, this sentiment of feeling from the market by tracing the yield, the return of these bonds, which clearly indicate was a tendency. In the case of equity markets, we can see the mini SP 500 futures on the screen. And in my opinion, especially considering the bad results during the week and also the increase on unemployment rate, I believe the positive non-farm payrolls plus a negative unemployment rate is getting neutralized each other and is not causing any particular effect on the equity market. And as you can see, maybe we can see a kind of shy broke up of the resistance of 5,600 points. Maybe the projection is moving us to 5,700 points in the coming sessions, but so far we can see this is not a massive reaction. The market is still probably expecting, and again, the last numbers published today are giving a kind of neutral effect on the equity market. On the other hand, the US index was dropping over the week due to the bad results of the economy, of the US economy. And this is another indication, another clue telling us that maybe the interest rates are going to get cut. Because if they cut the interest rates, they actually reduce the value of the dollar, and that makes sense. Changing to the new topic, we got the UK elections. In this case, we have to highlight one important statistic, which is the worst result for the Conservative Party in the last almost 200 years. And as you can see on the screen, the gap is massive comparing with the 2019 elections. The Conservative Party has lost a huge amount of voters, and it has been in power for 14 years. And again, is the worst result since 1834. Almost 200 years. Results are gone due the bad performance on the elections. And to be honest with them, I just bring to you a few numbers to be fair with the last government of UK, the government that is actually leaving the administration right now, because we got a whole compilation of data showing that the British economy has been getting flat. It's improving lately. The last GDP growth, it was higher than expected. It's reaching almost 1%, 0.7%, compared with other economies. The only one who is going slower is the German economy. But as you can see, we have seen in the last 14 years, they have been facing the financial crisis. They have been facing also the Brexit process. They have been facing also the COVID crisis and inflationary shocks that, in the case of United Kingdom, raised the inflation to about 11%. Overall. So it was actually not really good times for this government, and has been dealing with really strong storms in the economy, global economy for the case. Talking about the FTSE equity in the London Stock Exchange, we can see the reference index, which is the FTSE 100, and it's rising over the journey. So it's ending the week in positive areas, in positive zones. We seems that 8,100 points seems to be a kind of support, a clear support on the case of FTSE 100. We also mentioned this in social networks. I shared this chart a few days ago, precisely with that 8,100 points on support, and we highlight that levels then, and we can see that it works actually well, and the market is responding and probably moving back to 8,300 points, and we will see there because it's another resistance on those levels. In the case of the pound, has been also rising against the dollar, surprisingly, which means also the result of the elections, regardless the bad performance from the Conservative Party, is good for the pound and it's good for the equity, it's good for the market in UK, for the UK market, because obviously it's indicating that Labour government gonna follow exactly the same lines that the UK, the previous government, Conservative government, have been doing. Same thing, they're gonna keep investing in green energies. They're gonna keep the lines of the foreign policy in the same path. They have been visiting Ukraine, Zelensky. So all of these main lines from foreign policy and even energy sector, they're gonna invest the same amount of time and money and the same compromise to keep moving forward the previous compromise from the previous government. So therefore, it means continuation in most of the main policies and the important ones. And I think the market is just discounted that kind of rest because nothing is really changing in UK government. Now, mention just the last comments done during this week on that submit of central bankers. We highlight a few comments from Christine Lagarde here. Mainly, she was just, let me share the whole screen so you can see in detail. But she was like, ECB President Lagarde signaled that more data is needed before decide or further rate cuts, making move in July unlikely. However, the central bank appears confident cuts can resume in September if data allows. So again, it's telling us that they're gonna keep cutting the interest rates only if the data is in line with the policy, with the monetary policy, which means like if the inflation is still low and is still flat, and just as a reminder, the core inflation was little bit rising in the last few data, so they probably gonna follow the plan. And regardless, that inflation, recently we mentioned in the previous report that one of the main members of the Central Bank of Europe mentioned that regardless the volatility on the inflation, they're gonna keep clear compromise of the monetary policies, which in my understanding, it means they're going to keep cutting the interest rates. Now, euro-dollar is rising, regardless of comments, or maybe precisely because of those comments in Portugal, because if they are saying, like, we're going to take a kind of break until September to decide if they continue cutting the interest rates or not, it maybe cause a kind of strength effect on the euro, but we can see that clearly the 108.50 is probably one of the next resistance on the euro-dollar, 1.0850. And it's going in that line. Now, thank you for watch this video. Thank you for follow this video. And if you like the content, remember, give me a thumb up and follow the next reports. Take care. Bye-bye.